A very good day everyone. I'm Jyotika Kaleselvan, metric number 279996. Here I will explain about economy analyze and industry analyze. First of all, economy analyze is divided into two, namely fiscal policy and monetary policy. Government will boost government spending while decreasing taxes. This will increase the amount of disposable income individuals have and as a result putting more money in consumer wallet to spend on product and services retailers provide. When the government execute a contractionary fiscal strategy in which taxes are raised while government expenditure is reduced, disposable income is reduced immediately. This is because when customers pay more taxes, they have less money to spend, causing them to spend less on product and services. Aside from that, monetary policy have an influence on retailing in this scenario, as it does on all firms in general. Central bank use many methods to set monetary policy, so they can use assets such as bonds from regular banks in order to contribute money to the economy, or they can sell them to banks in order to withdraw money from the economy. Adding money to the economy typically decreases interest rate, making money more available for business growth, consumer spending, and economic growth. Therefore, it can be seen that economy analysis such as monetary and fiscal policy affect Aeon, Padini, and Pakistan, which is retailers. Next, about industry analysis, which is the growth cycle in industry and its competitive position. The most highlighted stage is the growth stage, during which the industry will see rapid sales growth. A retailer has a foundation in new market and wants to grow either by broadening its product category, adding new service, or opening more stores. Next, the retail business in which Aeon, Padini, and Pakistan compete is extremely competitive. So in order to survive this sector, all merchandise have to be powerful and unique. Padini Holding Berhad, for example, runs severe promotion throughout the year. Every year they have unique season, that is spring, summer, fall, and vacation. Those items with high price will receive a year-long discount. That's all. Thank you.
My name is Shunshili, matrix number 276965. So I will continue present fundamental analysis. The first fundamental analysis is current ratio, which a ratio is a liquidity ratio method that assess a company capital to meet either one short-term obligation. It shows financial aspect about how management and account receivable position shift in ability to fund down current debt. According to the graph, Padini Holding reached the peak through the year. The greatest current ratio was 5.4. However, when compared to the other two companies, Aeon Core Malaysia Berhad has the lowest ratio in this year. The minimum ratio was reached until 0.34. So a current ratio that is comparable to or somewhat greater than a business average is regarded as acceptable. A low current ratio proportion that an industry norm might imply a greater change issue or default. Likewise, when a company's current ratio is high in comparison to its rival, it shows that the company will not properly managing its asset to proceed. Next is quick ratio. The ratio is a measurement of company capacity to satisfy short-term liability to use its most cash asset. As seen in the graph above, Aeon has a lower quick ratio, which is 0.06 in 2019, while Pakistan Holding has the highest quick ratio of 1.09 in the same year. Padini Holding reached its greater point in 2021, which is 3.85. A quick ratio of 1 considered usual. It denotes that the business has only sufficient assets to dispose to repay of its current creativity. A business with the quick ratio less than 1, such as Aeon, may be unable to complete payoff of its obligation in the short future, but a company with a quick ratio more than 1, such as Padini, can wipe off his debt instantly. Account receivable turnover ratio is a term receivable that take part of financial indicator used to evaluate a company's ability to collect receivable. As can see, Padini has the highest ratio over period 5 years, whereas Pakistan Holding had the lowest ratio from 2017 to 2021. In 2019, Aeon had a slightly different ratio than Padini, which declared 97 and 102 respectively, while Pakistan Holding declared a lower ratio of 22. This ratio measurement how well a company utilizes and manages a debt is lent to customer as well as how quickly then the loan received and refunded. For instance, Padini Holding is an effective company, thus it has greater account receivable turnover ratio, but Pakistan Holding is inefficient, thus it has a lower proportion. Inventory turnover is an economic metric that illustrates how frequently a company inventory is traded and restored over a given time period. Parcel holding has its peak last 5 years as seen at the graph above. Aeon was maintained very stable average over the previous 5 years, which leads Padini holding fell from 4 to 2 from 2019 to 2021. Good turnover ratio measure how rapidly a company sells its inventory. For example, Padini holding low turn rate suggests poor sales and possible excess inventory. A high ratio on the other hand, such as Parkson, suggests either excellent sales or inefficient inventory. The asset turnover includes the average quantity of cash and cash equivalent to the total number of assets. As can be seen, the decrease from 2019 to 2021 is considerable, notably that Padini holding which decreased from 1.87 to 0.81. Padini holding on either hand has a low 5-year ratio of 0.34 to 0.48. When the asset turnover is higher, Padini holding is much more efficiently at the creating income and its asset. Padini holding, on the other hand, has a lower asset turnover ratio, implying that it is not using its asset efficiently to generate sales. To gauge financial leverage, the debt-to-equity ratio is computed by taking firm total ability of equity. Aeon has grown from 0.07 to 1.38 in the previous 5 years, as mentioned above. Parcel holding will have a higher ratio of 3.10 in 2020. A high debt-equity ratio is frequently linked with a high risk. This suggests that the parcel holding was proactive in supporting in 2020 and 2021 growth with the debt. The equity multiple is an important indicator that determines the percentage of receivable backed by investor equity rather than debt. According to the graph, Padini holding has the lower equity multiple from 2017 to 2021 with a number of 1.29 in 2019. A low equity multiple shows that the company is less relevant on debt. Nonetheless, Padini holding has the highest equity multiple among these 5 years, peaked at 6.49 in 2020. A higher equity multiple indicated the company relies sustainability on the order to finance and its ratio.
Is discipline metrics and is 27826. So now I'm going to explain about the time interest earned. Time interest earned show the ability of a company to pay its debt. A higher time interest earned score indicates that a corporation has sufficient funds left over after paying its obligations to keep investing in the enterprise. So Padini Holdings has the highest time interest earned from 2017 to 2021. Next, for the profit margin, determines the proportion of revenue that is used to calculate net income or profit. A higher net profit margin means shows a company is effectively pricing its products and practicing better cost control. So the graph above shows that Padini Holdings has the highest net profit margin from 2017 to 2021 and has a peak in 2018 with 1.1061. Next one is return on asset. So return on asset refers to the financial ratio used to measure a company's profitability in relation to its total asset. So the more profitable a corporation is, the higher its ROA will be. So the graph shows that Padini Holdings return on asset increased from 2017 to 2018, which are 19.23 and 20.07 respectively. Then decreased to 2021, which is 0.0525. So furthermore, for the return on equity, calculated by dividing net income by shareholders' equity as a measure of financial performance, a higher percentage shows that a business is more successful at making a profit of its current asset. So Padini Holdings shows that it has the highest ROE among 3 companies. For the shown P ratio, examines the market value of a company's share in relation to its earnings per share from the previous year. So considering that the current market average P ratio is between 20 and 25, a P ratio over that range may be negative, from 1 below that may be advantageous. So Aeon Corporate perhaps has the highest current P ratio from 2017 to 2020, while Padini Holdings has the highest fair P ratio in 2021. So the dividend ratio demonstrates the percentage of a company's profit after tax that is distributed to the shareholders. The riskier the number, as if something goes wrong, the corporation won't be able to avoid having a slate its dividend. So M Corporation perhaps has the highest dividend payout ratio in 2017, 2018, 2019, and 2021. The last one is price to book value ratio. So this ratio is used to compare a company's market value to its book value. So historically, a stock may be undervalued if its PB ratio is less than 1, which is considered a good PB value. Partini Holdings has the highest price to book value ratio among the three companies. That's all from me. Thank you.
I'm Li Hui with my metric number 279506, and now I would like to present about the estimate equity value for the three company. So for the dividend discount model, the estimate equity value for Aeon, Padini and Parsons using dividend discount models are 0.0892, 0.28 and 0 respectively. Padini has the highest estimated equity value as the company has the highest average dividend per shares and a required rate of returns, whereas Parsons has the lowest as no dividend has been paid in the past 6 years. Besides that, for the free cash flow to equity model, the estimate equity value by using this for Aeons are negative from 2022 to 2024 compared to the highest, which is Parsons, and the estimate are positive. From the estimates, we can know that the Parsons Holdings equity shareholders can receive more cash compared to other company. So for the PE model, Padini Holding has the highest estimate equity value from 2022 to 2024, which are 3.70, 159.58 and 8,687.93. Whereas the Parsons has the lowest estimate equity value, which is 0.21, negative 5.85 and 3.53 respectively. The estimation shows that the market may willing to pay today for a stocks based on its past or future earning for Padini Holdings among three companies. So that's all for me. Thank you.
I'm Shaki 280524. I will explain about MACD. In analysis, there were different trends on MACD chart between the three stock companies. We start with Aeon. Aeon was the highest among the trend that provide the trader highest profit 0.073 price scale, which indicate the trader to sell in high earning in total of $1.89 million. It was found in 19 March 2021, which occur market bearish confirmation. Furthermore, Parsons Holding chart shows that there was bearish market occur when the moving average line crossed below the stock price line, where the intersection occurs on low scale of price 0.08 indicates low earning from sell by trader. According to that, on starting trade, trader buy back in event bullish market since it was a good indication to buy at lower price. And the last one is Padini Holding. Padini Holding chart shows both line was increasing at the end of year 2020 until early year 2021, while in 26 April the moving average line crossed below the stock price line. The bearish market was occur and sell on $2.93 price. Next, I will explain about RSI. The relative strength index is a momentum that measure based on recent price change to identify overbought or oversold condition of stock price. The RSI is being visualized using a line of graph that move between two extremes and have a scale from 0 to 100. Based on the first chart, Aeon Co company was identified the most overbought occur on 14 May 2018 in range 77.14, which above 70. It indicates bullish and increased stock price, while on 19 February 2018, Aeon Co indicate at lowest range from year 2017 to 2021 for 16.53. Based on Parson Holding chart, there is the highest range occur on 5 April 2021 for 72.00. It was the highest over above happened between 5 years with bullish and increasing stock price. There also the lowest range appear between 5 years, which 16.23 on 23 March 2021, which indicate the highest oversold happened. And the last chart, the highest range level of Padini Holding Company was found on 6 November 2017. Furthermore, they also occur lowest range between the 5 years, which is 21.001 on 10 December 2018, which indicate traders are oversold the stock price. So in recommendation part, after looking for whole analysis made, we found that the stock that should be bought was Aeon Co company. Why? This is because Aeon Co company has performed 100% in company profit 91.35% with market capital 1,811.16 billion compared to Padini Holdings and Parson Holdings, which have profit 87% and 30%. Furthermore, Aeon Co company also has a higher earning per share with rates 0.068. A high earning per share rates indicate that the company is more profitable and has more profits to distribute to shareholders. In addition, Aeon Co company also has the highest growth rate compared to Padini Holdings and Parson Holdings. And the last one, Aeon Co company has better liquidity with a high volume, where buying stock from the highest volume market company can result in a higher return of investment.